Good afternoon. Thanks for joining. This is Michelle Savage with XBRL US, and you are here for the XBRL US webinar, Data Quality Committee Rule Sets 7 and 8. So we're going to be talking about two different sets of rules, one that has been approved and finalized, and a second set that is out for public review. Our speakers with us today are Lou Roman. Lou is the chair of the XBRL US Data Quality Committee, and he is also Vice President of XBRL Services at Topan Merrill. I have been lucky enough to be able to introduce Lou many times as being from Merrill Corporation, but a few months ago, Topan Vintage purchased the transaction and compliance business from Merrill, and yesterday, the two organizations announced the rebranding of the new company with the name Topan Merrill. So I'm probably the first person to introduce Lou as a member of Topan Merrill. So welcome, Lou. We're very glad to have you with us today and very happy that you're chairing our committee. And our second speaker today is Campbell Pride. Campbell is President and CEO of XBRL US. So before I turn this over to Lou and to Campbell, I just want to tell you a little bit about the XBRL US Center for Data Quality. I think many of you are familiar with the organization, but just so you know, the Center for Data Quality is the organization that funds the work of the Data Quality Committee. And those organizations are Topan Merrill, Lou's organization, which is a founding member. And secondly, we have Altova. We have the American Institute of CPAs, the AICPA. We have a couple of new members, one of which is Broadridge Financial Solutions. We want to welcome Broadridge to the Center for Data Quality. We also have Certant, we have DataTrax. Donnelly Financial Solutions is also a new entry in the Center for Data Quality. They previously were a founding member, and now they're back again, and we're very happy to have Donnelly. We have P3 Data Systems, and another new member, RDG Filings. RDG was also previously a founding member, and now they're back again too. So we're very happy to have our new members, and happy that the group is here to really help drive the work of the XBRL US Data Quality Committee. So with that, I'm going to turn it over to Lou, who is going to tell you a little bit more about the committee itself and the work that it performs. Lou?
Yeah, with the funding in place from the Center for Data Quality, that produces under it the Data Quality Committee, and the mission of that committee is to develop freely available guidance and validation rules to eliminate inconsistencies and errors in XBRL data to enable automated analysis of the data. A key here is that the rules and the guidance that we produce, they aren't proprietary, so they are free for all to use openly. So ideally, you'd think of the rules as your rules to use to improve the data quality, however you're able to do that. Whether you're a registrant, whether you're a software provider, a preparer, a user of the data especially, or an academic, or whatever else. The rules are free of charge and open to be used by everyone. The committee has three key activities that we do. The first one is to develop unambiguous guidance and rules, and we'll talk more about that. The second one is to then obtain input of that guidance through public exposure of the rules. And then thirdly, key activity is to conduct regularly scheduled meetings with the SEC staff. And without this third activity, in my opinion, the rules and guidance wouldn't be nearly as effective. The awareness and engagement from the SEC means that this is actually a lot more than industry driven. It's acknowledged by the regulator itself. So this third activity has been a very valuable activity for improving quality. So that's the mission and the activities. On the next slide, who is part of and who are the members of the Data Quality Committee? You see this on the slide. This is the group that does the work of actually creating those unambiguous rules and guidance. And it does take a lot of work. I won't say that it doesn't. So I'm glad for each and every company on this slide that contributes to that workload, and not just the companies, but the individuals within those companies that provide so much knowledge and effort and help in producing the rules. It truly is a lot of work. Fortunately, on this slide, you can see the companies, and as you can see, on the right side, we have a couple observers too, but it's a very diverse group of companies and a diverse group of functions that make this up. So it really helps to get different perspectives to make sure the rules are applicable and practical in that way. The two standard setters, you'll see the Financial Accounting Standards Board, and then from the IFRS Foundation at the International Accounting Standards Board. They aren't official members of the committee, they're observers, but fortunately, they are very involved. So that's the group that does the detailed work of creating the rules and guidance. Unknown to many, there's a robust process of creating the rules and guidance. And to emphasize that robustness, I'm going to show you, and at a very high level for no more than a minute, how much diligence actually goes into a rule. So on this next slide here is the first of 7 steps. And the first step is to gather input and draft rules based on many factors, including the SEC filings themselves, service provider knowledge, filer knowledge, the XBRL US staff contributes, database providers, and more. So a lot goes into this very first step. On the second step, on the next slide, is to consider the problems with each rule. And you can see 4 bullets here. On the last bullet, we determine whether or not the rule triggers false positives, in which case, if it does, we'll throw out the rule or alter it accordingly. The third step is to actually write the rule, including any, we have to write unambiguous error messages as well. And you'll see there's an example here on the slide of an example error message. The fourth step of the 7 is to test the rule against all historical filings. So the rule must work properly, and that's how we determine that it does, and it's producing the right rules for the right companies and at the right times. And if it doesn't, it gets thrown out or altered accordingly. The 5th step is to conduct a public review for 45 days. Everybody gets a chance to try the rules during the 45-day comment period and then give input on it. The 6th step is to incorporate feedback from the public review. And if the public doesn't like the rule, again, it gets thrown out or altered as need be. So at any point, we're testing the rules and correcting them and validating them, whether they are appropriate or not. So the 7th of the 7 steps, and the last step, is to approve and publish the rule. And then to reap the benefits of it once it's published. So that's the quick version of the 7 steps. It really is a robust process, and it results in solid rules. I'll just say that are key to improving the quality. And if you didn't catch it already, the real plan and expectation is that once the rules are published, that every filer runs the rules prior to filing each quarter, and then corrects any errors that are detected. That is the mission, the activities. If anyone wants more detail on the process, I only spent a minute or so on it, but there is more depth that I go into. So if you want more detail on that, please let me know. With that, Michelle, I will turn it back to you.
Lou, thanks very much. I also want to mention, I apologize, I forgot to mention this at the beginning, but if you do have questions, please click on the Q&A link at the top of your screen or on your console, and you can submit questions that way, and we'll take them as they come in. And also, as you can see here, we are offering CPE credit. Many of you have opted to get CPE credit, so I'm going to take our first poll. And if you have chosen to receive CPE, please make sure that you respond to the question that's posed here. So if we go to our first poll. Okay, so hopefully you can see this on the screen. How does the Data Quality Committee develop the validation rules? First response option is reviews historical filings and input from data providers, investors, analysts, and preparers. Second option, reviews other standards implementations from around the world. Or third, the rules are developed through an automated process. So if you're getting CPE credit, please click on the response that you think is most appropriate, and then we'll move on to a second CPE question. So I'm going to give you another 20 seconds or so to respond. Okay, just another 5 seconds or so here. And we'll end this poll. Alrighty, okay. So I'm going to end that poll, and we'll go on to our second poll question. Which of the following questions is not a consideration when the DQC prepares new rules? Option number 1, the error must occur at least once in every industry group based on historical filings. Or is it 2, an unambiguous rule can be established to flag the error? Or 3, the triggering of the error cannot result in a false positive? Which of these is not something the Data Quality Committee considers when they are preparing new rules? So we have just about another 25 seconds to go. Okay, just another 5 seconds and we'll close the polling. Okay, great, thank you. Okay, so we're now going to move on to public review of the 8th rule set. And Lou, I think you're going to pick up here and walk us through this.
Yes, this webinar is about the 7th and the 8th rule set. So we'll start here with the 8th set of rules, and then later go into the 7th set of rules. But this 8th rule set, it's currently in step number 5 of those steps that I mentioned. And what that means that it's currently out for public comment. And as you see here, the comment period is a 45-day public review, which will close on February 1st of 2019. So there's still time to comment and get a feel for those rules and provide your thoughts on them. We appreciate any comments. The importance of that participation, refining the rules, that's the big thing. Not only you as a filer, as a service provider, as a user, but you and your clients should adhere to those rules. So now's the time to refine them as need be. We've seen over and over and over the next bullet, as it says, that the more input we get from creators and users of the data turns into and equals better rules. We've seen it in all the prior rule sets. It's very valuable to hear from every interested party. The input that we prefer as part of the Data Quality Committee, there's 3 bullets here. First of all, what are your concerns with the proposed rules? If you have an issue with it or any thoughts on it, what is that concern? Secondly, we'd like to hear is if you have any proposed revisions. Usually when you see something that doesn't make sense or you think is not correct, what would be the way that you would do it if you were to revise it? And then thirdly, if applicable, what is the impact that you see on the usability of the data? So you see a rule that isn't right in your opinion, here's a revision, but then lastly, this will have such and such impact that may be big, medium, or small, but what is the impact that you see? These 3 things are the ideal input that we would like to receive. You don't have to do these 3. If you just have a comment, a sentence or 2, that's fine as well. Please, we'll take any thoughts you have, but these would be the ideal 3 things for a comment on a given rule. On the next slide, I want to explain what's in this 8th set of rules. So there are 2 rules here, rules number 79 and number 80 in this rule set. Rule 79, it checks if the filer has used an extension or a unique member element when there exists a known taxonomy element in the country or the state and province taxonomies. So what does that mean? I'll give you an example. Assume there's a disclosure that shows a certain item. It's disaggregated by country, and one of those countries is Canada, for example. Well, to tag that amount for Canada, the filer is going to look in the US GAAP taxonomy, let's say, for the Canada member. Okay, that member doesn't exist specifically in the US GAAP taxonomy. So the filer might erroneously stop there and say I can't find it, I'll create an extension or a unique tag for that Canada member. In that case, the filer should have looked in the country code taxonomy, since that is approved by the SEC to use, and it's usually contained within quite often the taxonomies that the company is looking at. But let's say that mistake does happen. In that case, the DQC rule would flag that error, stating the issue, and then stating that the member does not exist in the approved, or it does exist in an approved non-GAAP taxonomy, and therefore that extension should not have been created. So that's Rule 79. It happens a lot with countries, states, or provinces when a company says, I can't find Germany, I can't find Minnesota, I can't find Canada, and therefore they create an extension. That is inappropriate. So rule set number 8, or not rule set, but rule number 80, that's in this rule set number 8. The rule we just talked about, number 79, that applies to filings from both the US GAAP taxonomy and the IFRS taxonomy. So the second rule, number 80, pertains only to filings using the IFRS taxonomy, and that's a key item here. What it tests is whether the values for a given list of elements are negative. And again, this is just for filings using the IFRS taxonomy. So if that value is negative, an error gets flagged. Very simple. A similar rule currently exists for US GAAP filings, and I think if you're familiar with the rules, you're aware of that one. It's rule number 15. But this rule for IFRS filings is very valuable, and part of the reason is the IFRS taxonomy is designed so that a majority of the elements are meant to be tagged with a positive value. So that is the case. Of course, there's exceptions, so the rule does account for those exceptions. For example, it doesn't test elements when a specified member is present, which would allow that value to properly be negative, and that is spelled out deeper into these rules. But the number of IFRS elements that are on this list of items, line items that shouldn't be negative, there's 733 of them, so quite a few. And the list of members that are excluded, in other words, if a given line item is present, but it has one of these members, there's 36 excluded members that are part of this rule. So 733 line items and 36 member exclusions are part of this, that all have been tested and done a lot of work on them to determine which ones are applicable. So that's a lot, and this will be a very valuable rule improving quality for IFRS filings. So those are the two rules that are rule set number 8, and it's out for public comment right now. We encourage your comments on them. And with that, Michelle, I will pass it back to you.
Great, thanks very much, Lou. Okay, so what we're going to do now is I'm going to walk you through how to conduct the public review. And so I'm going to switch my screen a little bit here. And we're going to go to the XBRL US website. And I'm sure many of you have been here before. But if you go to our website, xbrl.us, and click on data quality, which you see in the top navigation bar here. Okay, this brings me to the whole section on data quality. And if you look on the navigation on the right-hand side here, you can see guiding principles for element selection, that's a document, approved guidance and validation rules, and then you see public exposure of guidance and validation rules. Okay, so I'm going to click on that. And this brings me to the 8th rule set. Okay, so it indicates that the current version is 7. Okay, so this is going to be the 8th rule set. And in order to submit comments, we ask that everyone agree to the terms and conditions for public comment. And this, looks like a long, lengthy document, but it essentially just ensures that any comments that you submit are given to us freely and clearly, that there's no IP associated with it, because we want to make sure that all of the rules continue to be totally open and free. So I'm going to go back here, and then in order to submit comments, you just come down here and you see here are the 2 rules that Lou just spoke about. If we click on extension members, it's going to tell us a little bit about the rules. What is the rule intended to do? What's the function of the rule? what problem is then solved by the rule, and then it provides a sample rule message. It also provides some information for developers who want to incorporate the rules into their system. It gives the template that's used. And then if we come down here, it provides a method to input a message, your comment. And you can see that it also will show all of the comments, so you can see what other people may have indicated before. So here's just, Michelle Savage, just a test comment. But you can just, respond here, fill in your comment, indicate that you agree that we can store and handle your comment, and then post it. I'm not going to go ahead and post one here, but that just gives you the idea of how to do it. The other thing that you might want to consider as you're reviewing these rules in the 8th rule set is you might want to check your filing against these rules. So if you click here, you can come in here, and again, you do have to agree to the terms and conditions. And then you can actually choose a filing and upload it and test it against both the public exposure rules and all of the existing approved rules. I'm not going to do that here because I am actually going to show you how to do this in a little bit when we talk about the approved rules in Rule Set 7. But that's something that you may want to do and take a look at the error message that's generated. Has anything in your filing triggered some of these new rules that are out for public review? If they have, do you agree with the triggering of that rule? Do you agree that there's an error in your filing? If not, that's a good way to get information to make a comment, to let us know that maybe there's a false positive, or maybe the error message isn't clear enough in how you correct that rule. So that's a really good way to go about conducting the public review. Okay, so with that, I'm going to go back to our slides, and we're going to turn to the final approved 7th rule set, and I'm going to turn it over to Campbell Pride right now. Campbell?
Thank you, Michelle. So today we're just going to I'm going to give an overview of the approved rules for Rule Set 7, and the reason we're starting to go through and have just another look at those. We've got a number of webinars in the past on these where we went into a lot more detail. But the main thrust of these rules of the Rule Set 7 is going to have a big impact on 10K filings. So you should just really be aware of those. And the main areas it focuses on have been revenue recognition, and secondly has been updating rules for pension disclosures, particularly defined benefit disclosures. So if you have a defined benefit disclosure, then the Rule Set 7 is basically something you really need to run on your filing. And we'll go through just the highlights of what these rules are as part of Rule Set 7. But firstly, we just did some updates to the rules that we'd approved. And if we do updates to existing rules from time to time, and the reason for that is we find a problem, it's flagging a false positive, so we'll go and do a change to it. So in both these cases, the case with the first one, axes with inappropriate members, there were some additional extension members we would allow on some axes just for some cases where certain situations come up. And this really was in some of the consolidation axes. And then negative values, in some cases, there are, in this particular case, there were some negative values that were firing, and we found exceptions to the rule. So we took those out. So that's why we've had updates to these rules. They're not that major, but I just want to make you aware that from time to time there will be updates to existing rules, either to reflect changes that have been made in the taxonomy, situations we didn't foresee when we wrote the rule. So these two rules, DQC 1 and 15, those two rules had existed before Rule Set 7, but there were some changes made to them as part of Rule Set 7. So if you see some errors coming up for negative values or DQC 1, or you had errors in the past, they're not coming up, it may be because of those changes we made. So we can go to the next slide, please, Michelle. So the new rules that were added as part of Rule Set 7 as I mentioned before, mainly focused on two areas: revenue recognition and pension disclosures. So the first one here, we've got mutually exclusive elements. This is a very broad heading, but really what it applies to is the use of elements for companies who have moved or have adopted 606 revenue recognition disclosures. And so for most of you, you've probably already moved to that new standard. However, the FASB taxonomy includes both elements from the old standard and from the new standard. So one of the things that was happening is companies would move to the new revenue recognition standard, but they would still continue to use elements from the old revenue recognition standard. So it's a kind of a all or nothing approach to this. So you've got to move from one set of elements to the other set of elements. So what this rule does is it kind of flags where those elements have been intermingled. Now, in particular, this has kind of been moving a little bit back and forwards. You'll see in the 2017 taxonomy, they hadn't specifically identified them, but in the 2018 taxonomy, they'd specifically identified transition elements. So really, if you've gone to 606, you shouldn't be using some of those transition elements anymore. So we this rule basically has a list of, if you've used this element, then you can't use any of these other elements. So if you're getting it this error, that's the reason for it. There will be a change as part of Ruleset 8. There will be a change to this one coming up. Has been identified. There are a couple of elements which the FASB has included in the 2019 taxonomy, which basically they've said you can use under the new 606 standard, which they had said you couldn't use under the 2018 standard. So that basically the rule will reflect that change. And most of that occurs for deferred revenue, which you've got sitting on the balance sheet. So there'll be an update there. The next rule is geographical axes used with the pension line items. So really what this really applies to is with the new so there are a lot of changes made last year to the pension disclosure by the FASB, and so this basically will trigger a number of changes that will be required by companies. So most of that wouldn't have affected you, but it will affect you for this 10K filing that you're probably preparing now. So you really want to be aware of this. The FASB had published a big implementation guide that spans over 2 documents. So what we've tried to do is to go through all that updated guidance the FASB had issued, and put rules in place so that if you run these rules, you should be able to see, basically be able to make changes. Then that would basically put you in line with what the FASB implementation guide is. So this one here, Rule 68, is basically one of those, basically reflects some of the changes they've made. So this rule in particular is really just identifying where you've used the geography axes in a pension disclosure. So typically this shouldn't be done. The FASB's added new axes to reflect the location of where the plan is. This is where people had used the geography axes in the past. So this is basically this new axes, and if you've used the geography axes in a pension plan disclosure, you should look to change that to one of these new axes. If you're trying to identify which geography a plan asset security is held in, there is guidance on what you should be doing there, and you should be creating new members for those. So basically the rule and the rule message will explain that. And if you have any other questions, please let us know, because then we can always go back and update the rule message to make it clearer. The next rule is the plan asset categories component members. And this, once again, just identifies where a number of elements have not been tagged with appropriate members, and it checks that they basically, once again, they are in compliance with FASB guidance. So you can have a look on the website. We document all this in excruciating detail, what it's supposed to do. So have a look at these, and then you can go and get a better idea of what it's doing. But once again, this is really trying to pick up those cases where the rules aren't in compliance with the FASB guide. In this particular one, 69, there's a lot of information in the implementation guide which addresses this issue, and a lot of it relates to things like related parties. It also relates to investments when you're including partial category of an investment. So if you've got disclosures about that, then this rule will basically pick up those issues. So this is kind of the FASB guide is kind of this very detailed and very complicated, but this rule's written in a way where if you've got it, if it's inconsistent, it'll give you a message associated with that. And there's the number of different messages this rule will give you. So we go to the next one. Thanks, Michelle. Plan asset dimensional aggregation. So basically what this rule does is it checks if you break down your plan assets by the classes of security. This basically check that, basically goes across all the plans, adds them up and makes sure they actually agree, the totals actually agree. Surprisingly, a number don't. They probably agree on the paper filing, but when people have tagged in an XBRL, sometimes there's mistakes being made. And in some of these disclosures, as you know, can be very large. So this basically checks that the numbers have been tagged properly, that the right dimensions have been used. So this rule is kind of very all-encompassing, and basically it just takes that table of all your plan investments, which can have a lot of investments, and adds them all up and makes sure all the interim totals add. Okay, DQC rule 71. This rule tries to identify this is really around revenue recognition. And one of the things that happened with the revenue recognition changes in that the FASB implemented was this expectation that if you had multiple products and you'd reported those on the face of the financials, you disaggregated them. This rule basically tries to make sure that if you've done that, that if you have a single product, that you basically have tagged it correctly. And the FASB put out some guidance on this and something called extensible enumerations. But basically what this rule does is check that basically you've done it the way the FASB expects you to do it. So this would, an example of this, mean, let's say you've got revenues, but you've got one product, and you've got ABC widget product, and you only had ABC widget product sitting on the income statement. The expectation is that you don't create a dimension for that. You use something called an extensible enumeration. And the rule basically lays out what you should do in that case. So this is kind of helpful. And it kind of goes back to the point of the rules, is so that you don't have to read through this documentation and fully understand it. If you can run the rules, you can see what one of these, how the implementation guides will affect you in the implementation. And the next one, DQC 72. This rule is just looks at, it's a very specific case, but looks at plan asset category percentages and makes sure that the appropriate axes have been used with that. Obviously, if you break down a pension plan into different categories, you have to report what the percentages are. And so this is basically making sure that you use the appropriate axes to indicate that. Go to the next rule, the next page, please, Michelle. DQC 73, this basically, if you're reporting information about your plan assets, this basically rule just has a list of, these are all the line items we would expect you to be able to report about a plan asset. So basically tries to limit how this axes can be used, the asset categories axes. A lot of cases we saw this axes was being used in other places where it shouldn't have been. So this rule is just really tries to put some constraints around how that reporting is done, and just to help you from making mistakes there. Okay, that's the last of the pension ones, but DQC 74 is back to revenue recognition again, and this one here is a little bit technical in terms of the XBRL, but basically a lot of companies are having problems when they're reporting revenue recognition. If you're reporting the total of your obligation, and you'd broken it down by the period over which the expected timing of the satisfaction of the obligation was going to be achieved, there is you can't put a total for that total if you've used this type dimension. And so to get around this problem, a number of companies were using a nil value on the dimension. So what this rule does is it basically flags if you've done that and tells you the appropriate way that the disclosure should be made. So there's kind of two choices you can make. It's just saying, don't use that choice, use this other choice. And this is just back to, and this basically tries to implement the FASB guidance that have been put in place. Now, if you go to the website, again, you can look at this and you can read all about it. DQC Rule 76 is basically performance obligations with no durations. So basically this rule is basically saying you've reported that you have a performance obligation and you've said, we're recognizing this performance obligation, we think it's going to be paid in 1 year, 2 year, 3 years. But if you do that, there are some other facts you need to report. You've got to report what is the period over which you think that income is going to come in. So this basically will tell you if you haven't reported the duration over which those payments will be expected to be received. So you can't have one without the other. So it's really just testing that you have that. Then it also makes sure that those numbers are lining up appropriately. So so if you say I've got money coming in in the next 6 months, that you actually have the recognition period aligning with that. Say that this is the income that we will get in the next 6 months. Okay, rule DQC 70. The next one, please, Michelle. Okay, satisfaction period with no satisfaction start date axes. This is basically closely related to Rule 76, and it's just making sure that the structure of the table has been set up appropriately. If you don't have there's an element called the satisfaction period, which I've been talking about earlier, which is basically a duration of time. If you have that element, you need to have the start date axes. So if you don't have the start date axes, it says, hey, you got a problem. And the final rule, DQC 78, this is really kind of unrelated to revenue recognition and pension. This one kind of stands on its own. And this is really related to ownership interests. So in a number of cases in a filing, you may report what's the percentage ownership that you have either in a non-consolidated subsidiary. So in those cases where you report that percentage, the FASB has implemented introduced a new axis called the ownership axis. And this ownership axis should be used to basically indicate this is the legal entity we own, and this is how much the percentage ownership that we own of it, or what is our percentage ownership in this legal entity. In the past, most companies had used the legal entity axis to do it. You shouldn't be doing that for a number of reasons, but the ownership axis is the appropriate axis to use when reporting your ownership percentage in a non-consolidated sub. So have a look at if this rule is flagged, I think the message is pretty clear and tell you what to do. So hopefully you won't have any problems with that one. To kind of back this all up, if you go to the next slide, please, Michelle. We've written a document called the Legal Entities and Consolidation Guidance, which covers the aspects of the ownership. But this document is available on our website, and basically this guidance really handles how the legal entity axes should be used, the consolidation items axes should be used. It covers a lot of these very broad concepts in terms of tagging a document, in terms of what makes a legal entity different than a consolidated entity, and really give you a lot of guidance around how you should do the consolidation schedules, how interrelated parties are related, intercompany eliminations. So it covers a lot of ground in terms of how that stuff should be tagged. And basically the rules that we have implemented in both DQC, in basically Ruleset 7, but a number that we've implemented in prior releases basically all tie into this document. So it should be consistent with all the other rules that have been written. But it basically gives you, I think it's a good document to refer to if you get an error and it relates to legal entities, or if it relates to consolidation, or if it relates to any type of ownership that you may have in entities. This document, you may want to look at this and refer to it. If you have a complicated reporting structure where you've got multiple subsidiaries and parent companies, and you're reporting the financial statements of multiple entities in one single filing, you should also, this may be a good point to refer to if you have any questions about how you're tagging stuff, you should use this. I wouldn't recommend that you sit down and just go and read the document because it might be a bit too heavy in one sitting, but I think it's good as a good reference material to go back and look at it if you have any questions from the rules, or if you have a situation you run into and you're having difficulty tagging it. And what the intent of this document, it tries to tie together a lot of the FASB implementation guides that have been issued in the past and fill in gaps based on questions that we'd received in the past. Okay, so I think that's kind of a summary of the Rule 7. So Michelle, shall I hand it back to you?
Yes, great. Thanks very much, Campbell. We do have a couple of questions, and why don't I take those before I walk through how to check your filing against the rules. The first question is about data quality certification, and one thing that we emphasize is that there are numerous ways of using the rules, and I'm going to walk you through how to check your filing using the rules on our website. But you could also use data quality certified applications, and those are listed on our website. And the question is, does the number by the service provider mean that that provider only has incorporated the rule set up to that rule? And the answer is yes. And I'll show that to you when we get to the end of the program today. That we have, with each rule set 7, rule set 8, we run the certification process for applications. And on our website, it will indicate which rule set they are currently certified to run. So that's something important to check, but always check with your service provider because they may have incorporated the rules, and if they have, that's really the best way to run them. And the next question we have is there a release date planned for DQC rule set 8? And Lou, do you want to take that one? Lou or Campbell, do you want to take that question?
Yeah, sorry, I can. Go ahead, sure. Campbell, if you want.
Go ahead. Why don't you go ahead, Lou?
Okay, I'll go ahead. For the IFRS filers, we want to get, because they're going to be filing their annual reports, many of them very soon here, we want to get that rule set out promptly. As soon as the period ends on 1st of Feb, we will be promptly dealing with those comments and then putting it out, I would say sometime in February yet. We don't want to hold off on that one at all. We don't have a definitive date, but that would be our best estimate.
Great, thank you. Okay, and then we have another question, which I'm not sure if maybe Campbell, you can address this one. It's Rule 80 in the Excel workbook for member exclusions. Appears to imply the member and access relationships are part of the test, but the text explanation of the rule explicitly states the rule does not test these member element combinations. Should users only consider the members present in this workbook as the exclusions? Note that this is a similar format to the related gap DQC Rule 15.
Okay.
Very specific question here.
Okay, yeah, so this is a little unclear, but I can clarify it now. We can go back and clarify it. So basically, this does operate the same way as DQC 15. So if you have a line, there's these line items that we wouldn't expect to be negative. However, they can be negative in certain circumstances, right? So, if it's a change, or let's say if it was treasury stock, and depending on the circumstances and depending where it is in the disclosure, items can't be negative, but if it's used certain members on certain axes, then we say it can be negative, and the rule won't fire. So that's kind of how the rules work. However, in the rule, it does say, it says the rule does not test these member element combinations. So what this is really referring to is, particularly in the IFRS taxonomy. So in the IFRS taxonomy, they have a number of members which basically force you to flip the sign on things, right? So accumulated depreciation, for example, is handled as a member in the IFRS taxonomy. So you would expect these values to be negative, right? And what this is saying is this rule doesn't test that those items are negative, right? So it doesn't say, okay, we would expect, you know, property, plant, and equipment, accumulated depreciation to be negative. The rule's not saying, yes, this must be negative. So basically, it's just, all it's doing is just checking, it's going through and it's saying, you know, we expect these items to be positive unless it has a member on it. Unless it has these member on it, then the rule doesn't run. It doesn't go to the next step and say, oh, it's got this member on it, then it must be negative. So it doesn't do that extra step at this point. And depending as we go on, we're looking to implement those at some point in the future. But Rule Set 80 currently doesn't test the inverse of those situations.
Great. Okay. Thanks very much, Campbell. Okay, so now I'm going to go ahead and switch screens here and go back on the web. And we're going to go to checking your filings. So, you know, here are the approved rules, which you should see here. These are all the approved rules. And then I'm going to go ahead and check my filing. And again, you have to agree to the terms of use in order to run the rules. And then you'll see here, it says check with approved data quality committee validation rules. And you can check just the approved rules, or you can also check the public exposure rules plus all the approved rules. So I'm going to go with the latter and check everything. And then I'm going to choose a file. I'm going to go to my desktop here. Here we go. And I'm going to run this test. So this is a 10K from a large company. And I just upload the file and then I check filing. And what's happening right now is all of the DQC rules, the entire set, including the public exposure rules, are running against that 10K. So it's a very large document, so it's going to take a couple of minutes here. But this is a process that any SEC filer is welcome to use the checking tool on our site. Any XBRL US corporate member is welcome to use the rules as well if they'd like to. And this is the kind of report that it's going to generate for you. So as you can see here, this company had a number of error messages. The first column indicates the severity of the error. The second provides the error code. And the third column provides the number of the rule. So you heard, you know, Lou and Campbell talk about, you know, DQC rule number 65 or whatever. And then here's the message details. And the message details is really what provides the information on what needs to be corrected. And so if you're looking at this from the standpoint of approved rules, this is basically giving you instructions on what you need to do to correct that situation. If you're conducting the public review and you identify a rule in here that is from, let's say this is from rule version 8. So this is the public review rules. You may look at this and say, hey, this is the kind of error message that's going to be generated with rule set 8, and you may have a comment. Maybe the error message isn't clear enough. Maybe you disagree with the triggering of the message by your own filing, or feel that it's not correct. So those are the kinds of messages that are really going to help us make these into better rules. So, you know, we encourage everybody obviously to run the rules. You can see that there are lots of messages here, and there are ways of improving the quality of your own filing. So I encourage everybody, if you haven't run the rules yet, you know, jump on our website and test it out.
And Michelle, I want to add a comment.
Sure.
There was a question earlier about when would the rule set number 8 be approved. And I said roughly mid-February. I wouldn't wait till then to run them. As you showed here, go ahead and click on the approved rules plus rule set number 8. And therefore, despite the fact that those rules aren't published and approved, you can still run them even beforehand. So it's a good idea, despite they aren't approved yet.
That's a good point, because those rules, you know, the rules in the that are still in public review, they have gone through many of those steps that Lou talked about before. So they've gone through a pretty rigorous creation and vetting process. And chances are, unless we get a lot of comments back saying there are any issues with it, there's a good chance that that's going to go in as a final rule. So run them now and make your corrections. So with that, we're going to go to our final 2 CPE questions. So I'm going to pull up our third poll. Okay, so hopefully everybody can see this on the screen. And the question, proposed rules are published for a comment period that lasts option 1, 45 days, option 2, 60 days, option 3, 90 days. So just take a look at that. And if you're getting CPE credit, please make sure that you respond to the question here. And we'll give it another 30 seconds or so. This is a pretty quick one to take a look at. Okay, I'm going to close down our poll and go to the last poll question. Which of the following are accurate statements about the 7th and 8th rule sets? Option number 1, both rule sets only cover US GAAP rules. Option 2, the 8th rule set covers IFRS rules and the 7th rule set covers US GAAP rules. Or option 3, the 8th rule set covers final approved rules and the 7th rule set covers proposed rules. Which of those statements is correct? Okay, we got about another 20 seconds here. So another 5 seconds and we'll close down this poll. Okay, I'm going to close that down. Okay, and then I just have a few other points that I'd like to make about other events and programs available from XBRL US. And someone had asked the question earlier about the number of rule set. This is a listing of the certified applications and services, the tools that are certified to work with the rules. And this is obviously going to change because Merrill Bridge is, I believe that name has changed to something related to Topan Merrill. But you'll see the number that indicates which rule set that particular application is certified to work with. So please be sure to use a certified application or service to work with your XBRL instance documents. The second thing I want to mention is that we have a number of programs coming up. We have a program next week on January 23rd, which is on state and local government reporting, effective reporting through standards. This one is specific to state and local financials, so it's not for SEC filers, but if it's something that's of interest to you, please join us. I think it'll be a really interesting program to hear about. And then coming up in February, on February 27th, we have another webinar on how structured XBRL data is used today. And this is a program featuring the CFA Institute about how various members of the analyst community use XBRL data. And I know this is a question that a lot of people have. Who's using my XBRL data? Well, this is a good webinar to find out. And the last program that I wanted to mention from XBRL US is our XBRL API, which was launched towards the end of last year. The XBRL API is essentially, it's a standard API that allows you to extract XBRL data, and you can pull data from our own XBRL US database. You can pull data, frankly, from any other XBRL US XBRL database. And we do have, I believe we have a webinar coming up, and I apologize, I don't have the date, but we'll send that information out in a follow-up email to everyone who's attended here today. But the XBRL API is a great way to access, a huge amount of XBRL data. So we encourage anyone from the analyst community, investors, public companies that want to do peer analysis take a look at the API. It'll help you extract a lot of interesting data, from other public companies.
Right, and Michelle, just on the API, just to add, you can also use the API to validate a filing as well. So it not only includes data, but you could, for example, submit a filing, like a filing that's already been filed, to the API, and it'll give you the results back. So what Michelle showed you with the website, you could submit a filing through the website, but you can also submit a filing through the API. If you're not comfortable doing with a pre-filed filing, that's understandable. But you could use, other filings which have already been filed if you wanted to test it out and try and run it on historical filings as well.
That's right. Thank you. Thanks very much, Campbell, for mentioning that. Yeah, and that's all that we wanted to cover today. I want to thank our speakers, Lou Roman, who from Topan Merrill, and who is also chair of the XBRL US Data Quality Committee, and Campbell Pry, President and CEO of XBRL US. Thanks again for joining us today, and we hope to see you on future webinars. Thanks very much.